Good morning and welcome to the Brazilian American Chamber's webinar on restructuring and distressed assets in Brazil, seizing opportunities and avoiding disaster. First and foremost, we wish you and your families health and safety in this difficult time. Thank you all for joining us, and thanks to Cescon Barrieu for sponsoring this timely event. COVID-19 has significantly hurt various industries, most immediately aviation, tourism, and entertainment in the wake of social distancing and reduced demand, and of course, other industries are bound to follow. Like other crises, the drop in demand has resulted and will continue to condition complex debt restructurings and opportunities to acquire strategic assets at discount prices. Our panel of prominent Brazilian American legal and financial leaders will discuss how the U.S. and foreign investors can properly protect their exposure to Brazilian companies in distress and capitalize on opportunities to make significant profits from a company's turnaround. Our moderator today is Daniel Laudisio, partner at Cescon Barrieu, focusing on banking and finance, capital markets, corporate law and governance, mergers and acquisitions, and private equity areas. He represents banks and other financial institutions, private equity firms, multinationals, private and public companies, and other investors in a wide range of transactions, including mergers, acquisitions, asset sales, joint ventures, equity and debt offerings, and structured finance transactions in several different industries. Mr. Laudisio holds a degree in law from Pontifícia Universidade Católica de São Paulo, PUC São Paulo, and a Master's of Law from Columbia University School of Law. You can find Danielle's full bio and those of all the panelists on the link on the reminder that was sent yesterday and on the BACC website. Before turning the screen over to Danielle, I would ask you to please use the Q&A tab for questions. You can make them at any time and we will look to answer them after the panel discussion during the Q&A period. Thank you. Danielle?
Thanks, John, and thank you, and thanks everyone who joined, especially we know northeast corridor of the U.S. and have been hit by the hurricane. So hopefully everyone's well there. But without further ado, I'll defer to Sam by asking to our friend Sam Aguirre from FTI Consulting. We know a lot of industries that have been impacted by the COVID crisis. I mean, we know of aviation, entertainment, tourism, those are obvious. And of course, happy to hear about them, but we also, I think everyone is interested in finding out, I mean, who are going to be, who's next? So who do you see facing difficulties? And of course, every time someone is in, a company is in distress, there are also opportunities to acquire assets at discount prices in strategic. So I'll defer to you, and thanks for joining us, Sam, today.
Thank you, Danielle, and good morning, everybody. I'll structure the presentation with a few slides. It's just a little easier to have the audience follow this. But at a high level, we've been doing this for, I've been doing this for more than 20 years, and this is going to be a wave that's going to last, years. Either, I'm thinking 5 to 7 years of restructurings, one way or the other. We're going to have several ways, but the recovery is obviously taking longer, and the longer it takes, the harder it's going to be for the real economy to recover. So we're going to see a lot of companies fall through, and a lot of opportunities, obviously, both in Brazil and across Latin America. So I'll just put this on the screen, and I'll be brief. Really, it's just setting the stage, I hope, for the presentation. Okay, and hopefully I'm not okay. Can you see my screen, Danielle?
Yes, we can, Sam.
Okay.
Just have to put on slideshow mode.
Slideshow mode, thank you. And then, okay, and I think you're seeing two, so we're just going to make it one. All right. I think we're good to go. What we're seeing is really exceptional conditions. I mean, obviously, the Fed in the U.S. has been very supportive, and we're seeing investors accommodating, borrowers even much more than what we saw in 2009. We're seeing a very strong high yield market. I mean, roughly, 10 billion of new issuance every month. So far, we've seen roughly 120 billion issues. So that means that, you know, investors are very accommodating. I think what they're seeing is obviously the need for a lot of companies to hoard cash and be able to hold on during, you know, the COVID. What we see in terms of activity in the restructuring market is really 69 companies filed during Q2. I think another 15 filed in the US in July. And of those, you know, of the large Chapter 11 filings, it's almost doubled in what we saw in 2019 for the same period. The obvious suspects, which are energy, retail, and consumer products. In Brazil, I think what we're seeing is, if you look at the focus and the consensus projection that we saw on Monday, and I think that's been like this for a few months, obviously, there's an implicit assumption that the reforms are going to be implemented sooner or later. I'm skeptical, and I think some of us will be on that, but what we're going to need is obviously significant reforms in Brazil to be able to keep the rates at where they are. I think what economists are seeing, and you know, that's a good debate for a beer, obviously, is whether the Selic rate can actually go up in the next few years. It's exactly the same problem as in the US. We're going to see very low rates, in my view. What the consensus is seeing here is, like, you know, we're at 2 today, could be a little lower, who knows? But we're seeing increasing rates in the next few years with the implicit assumption that the economy is going to pick up. My view, personally, I think this is going to be a long recovery, and we're going to be in low rates for a long period of time, trying to stimulate the economy as much as possible. And the question will be whether we can keep inflation in, you know, at bay. But fundamentally, you know, the government's assistance right now is critical, especially in the 600 reais check that, you know, I think the lower class of the population are getting. To the extent that this gets interrupted and will be interrupted, I think that's when we're going to see the real hit in the economy. So I don't think we've seen what's going on yet. I think the first phase, which has been really the 4 months, we've seen a lot of stimulus, both in the US, everywhere around the world, and in Brazil. But the worst is yet to come. In terms of, I think, judicial reorganizations, what we're seeing is obviously an ascending curve. It is obvious. The question is, what will it be? I've seen studies of, you know, maybe 2,000, you know, judicial organizations next year to 4,000 judicial organizations next year, which is, it's really hard to say. I think the judicial system is backlogged as it is. Ideally, you would like to push it all through next year to be able to sort out through the mess itself. But I think that's really going to start pretty quickly. So we're going to see a tremendous amount of activity. And I think in the next 3 to 4 years, and just by the sheer volume we got during this period here, which I think the courts are still trying to log through, the volume that's going to come will take a very long time before it gets processed by the courts. So we're going to have, I think, a lot of litigation and a lot of lengthy delays, I think, in the judicial organizations in Brazil. All that means opportunities. The way I look at this presentation is doomy or gloomy in a way, but it is fundamentally, chaos brings opportunities all the time in terms of M&A and asset acquisition. So I'll go through some of the sectors. These are not all the sectors. These are some of the sectors that I think we have a better view on it. So let me start quickly, and I'll just put a couple of remarks on each one. Automotive volumes are down 40%, and that's expected for the full year. It is literally falling off the cliff. What we're going to see is consolidation in the market. We have very large automakers all in Brazil, exporting to other countries in Latin America. Very low economies of scale. I think these guys have been trying for many years. My guess is that some of them are going to pull out at this point. It just doesn't make any sense. I mean, you're exposed on the component part to the FX, and on the other hand, you have very little ability to pass through costs because consumer demand is very low. What you're going to see is obviously their sale volumes is low, so you're going to see interim funding going on into these companies, and dealerships shutting down fundamentally. I think it's a bleak situation for the automotive and the entire chain. So I think you're going to see obviously opportunities for a lot of consolidation in that market. Airlines, we're very familiar with the airlines. Painful recovery. Literally, the biggest problem of the airlines is the visibility at this point. Is when will this restart? The cash that will be burned it's not it. Some of it has been burnt now because you're not getting the revenue. But the question is, how much cash will you burn once you start, you know, the operations? Because the question is, what will be your load factor? So the equation is difficult to quantify, and that's why you see U.S. airlines hoarding cash frantically at this point. And the longer the recovery takes, the more likely that even the U.S. airlines are going to have to file as well. So my view is I'm not involved with GOL or with Azul, but I think a restructuring in-house in Brazil can achieve certain things, but certainly a Chapter 11 can achieve other things. There are tools for reorganizing leases and lessors and these sort of things, which are really not available in Brazil. So at some point, these industries, just like automotive, airlines, education, they're high fixed costs, need economies of scale. You cannot carry on those fixed costs forever. At some point, you have to make the large decisions that you need to return either the engines or the planes. And for that, you know, the insolvency laws in Brazil are very limited to do something like this. No government package in the airlines is pretty clear at this point. And so, you know, cash preservation measures are everything in this industry for now. As for Embraer and Boeing, well, that is the you know, the mother of the ship at the end of the day. These are the guys that produce the aircrafts. I would expect those guys to suffer significantly, obviously, just like the entire chain. But obviously they don't have leases themselves. They're the one who manufactured this. So their challenge is going to be reducing the fixed costs to begin with. Okay, healthcare, we've seen a lot of activity in healthcare, and I think that's an area that we're going to see obviously even more activity. You know, I would say abnormally enough with the COVID, we've seen a reduction in costs in many of those industries simply because people fear going to the hospital, so they're going to go for very good reasons. So what we've seen is actually the ability to increase margins. Very recent. I don't think this is a long-term trend, because what this industry has a problem with is, in fact, going forward, is the ability to pass through costs. Historically, and this graph it's a little, you know, it has a lot of lines, but fundamentally, the upper line is the inflation of health services. The middle line is their ability to put through costs through the beneficiaries, the insurance companies, and then through us directly. And the other one is really the inflation that we have, you know, in the consumer market. So what you can see is that they have much higher costs. They have not been able to reduce their costs. And given that there's going to be a significant or a significant increase in unemployment and a loss of beneficiaries, these guys are going to be forced to reduce their costs significantly. So as we see two things. A big drive to reduce costs and a big drive to consolidate the market. The small players are going to have to join forces with the bigger ones. So we see a lot of M&A activity going forward. And there's been a lot of M&A activity in the last 24 months, for that matter. So it's been an active market altogether. Cement, steel. Cement is obviously been hit, but many years ago already. So they've been operating roughly, you know, at 50-60% capacity in the last 5 years. We've seen feeble activity in a few months, and that's explained primarily because I think people are doing residential projects. Given that offices are shut down, people are taking advantage of doing commercial projects. Brazil is like any other Latin American country. It's a retail market. In other words, it's going to be, you know, the individuals are going to buy a bag of cement, and they're going to do the little reforma, the reform or the improvement itself. The 600 check has helped enormously in that. So what we've seen is an impact in the activity today, but that's not bound to last. Cement is tied to GDP, and if GDP is going to be anywhere between -6 and -10, we'll see where the numbers land. Cement will continue to suffer significantly. So we don't see a recovery in the next few years. However, again, we're going to see significant M&A opportunity. There's really 3 or 4 big players in Brazil, and everything else is very fragmented. So anybody with 2-3 million ton capacity a year will have to join forces and have, you know, or create synergies within themselves or within the bigger ones, right, to be able to reduce costs. Steel is a little of the same in a way. They have the ability to export, which is different than cement, so they have a little bit of a way out. But fundamentally, volume has been down from last year. and prices in dollars have been declining significantly in the last few years. I think obviously low interest rates going forward are going to help to some extent, but it really is relying on automotive, heavy manufacturing, and some construction. So it's all tied to those ones. So again, I think we're going to see restructuring in those ones. Education, I think that's an exciting and difficult, environment. Obviously, what we've seen today is a lot of people delaying their decision to go back to school, and I mean university by that. I think we question whether students are going to be paying their semester now in September to go back to school when there's still, the possibility of obviously shutting down classes. So that's going to create another financial stress or further financial stress for a lot of institutions itself. And what we've seen also in recent months is the dropouts actually increasing. As you lose your job, I think lower income people tend not to go back to school. So, or at least it's going to be more difficult for them. So you're getting hit on both ends. Those that, are enrolled do not come back, and those that could be enrolling, well, they delayed their decision because of the uncertainty itself. Again, it's a fragmented market. I think we've seen some activity, and I think we're going to see still a lot of activity in like that. Iron ore and mining. I think we just wanted to point out that obviously iron ore prices are very high today. I think they're 117. I think this week. This is really a seasonal peak that you have in China, right? Prior to the rainy season, there's a lot of construction to begin with, and then prices tend to come down over the year. So what we see really is just an average in the 90s for the rest of the year, and an average going down a little bit over the further years because there's going to be more capacity coming online. That capacity obviously is filled a lot by Brazil, and Brazil has a number of problems which come from either the Samarco or the Brumadinho events, which will require the new technology on the dams. So the upstream dams are basically banned, and they're going to have to come up with reinforced technologies for that. That's going to require a lot of investments. We've identified roughly 65 dams among 35 companies in Brazil, and each is going to require 300 million reais, give or take. So we're looking at capex of 20 billion reais in the next 4 to 5 years. That's going to have to get done one way or the other. Vale has a couple. Everybody has a couple dams there. Having said that, there is 4,500 dams in Brazil. So of that, I think a very small portion of those are going to have to be fixed. But there is obviously money to be invested in those structures. That's it for this presentation. I'm going to stop sharing right now. That was a bit of an outlook. So Danielle, back to you. Thank you.
Thanks, Sam. You said, a lot of investment will be necessary. And I think before companies get to a scenario where we can definitely call them in a stress scenario, if they can act quickly, they can just deleverage by disposing of assets, sometimes strategic assets, sometimes some that they find out that they don't really need, like we've seen with some companies such as Petrobras divesting from some assets and focusing on just a few of the activities that they do. And so John, in your experience, I know you've done a lot of M&A in Brazil and throughout Latin America. So what do you see in terms of opportunities for M&A? What should buyers look out for? What should they be aware of when they come into Brazil and look for strategic assets at a time when they might be able to buy them at discount prices?
Mm-hmm. Yeah, thank you, Daniel, and thank you first of all to the Brazilian American Chamber, to John Welch, to Cescon Barrieu. Danielle, thank you for the invitation. It's always a pleasure to serve on panels with my good friends Sam and Fábio, and of course my partner Pedro. I'm John Kellner, partner in the corporate group at Paul Hastings, and I'm the chair of the Sao Paulo office here in Brazil. Sam, as always, you did a great job of painting a realistic picture of economic realities in Brazil that we're we're going through right now. And the current pandemic and related economic crisis has unfortunately resulted in unforeseen value destruction across numerous industries in Brazil, as you just pointed out. We were emerging at the beginning of this year from this worst recession in 100 years. We were so optimistic. We had pension reform last year. We were moving into the privatizations, IPOs, which hopefully will still occur. But we're very optimistic. And of course, this environment that occurred from the coronavirus changed things. Buyers and sellers who wish to transact are going to need to realize that there's adjusted economic realities. The pandemic is still raging in Brazil. As Sam pointed out, economic future is uncertain. News is positive in one sense, but negative in others. Factory orders in July can be up, but then banks indicate that delinquencies will continue through next year and maybe longer. And then of course, as Sam, you mentioned, you have that gigantic elephant in the room for Brazil, which is the uncertain return of the consumer and how that will impact the entire economy. So parties need to consider all of these things, Danielle, before they transact. Buyers and sellers need to recognize the current world in which we're living in. And if they choose to do an M&A transaction in this world, there are real benefits, as you mentioned, as opposed to working through the bankruptcy and RJ system. Out-of-court transactions can be done on a private basis and in a manner that avoids any potential negative publicity. It allows the company and management to focus on the business as opposed to having to manage a bankruptcy proceeding and all of the disturbances that cause and the negative implications that a buyer may face by going through and buying an asset out of bankruptcy. Buyers and sellers have significant control and flexibility over the transaction if they manage it out of the bankruptcy context. They can manage more flexibly exclusivity arrangements, breakup fees, consideration structure, how they're going to work out the payments. It's far more flexible in a private M&A context than through the RJ or bankruptcy code processes. But of course, there are burdens when it comes to doing a distressed M&A transaction. For first and foremost, and it's one we always look out for as lawyers, is that the transaction could be subsequently reviewed for fraudulent transfer, especially as you mentioned, Danielle, that a company offloading assets, not selling the whole thing. Fraudulent transfer is a major concern, as well as successor liability, and parties need to ensure that accusation wouldn't be successful, of course. You need to address contractual anti-assignment provisions and change of control provisions through a private M&A context. And so you may not be able to get the change of control consents from various parties to companies' contracts because of all of the distress that's happening, whereas availing yourself through the bankruptcy processes might facilitate that. And so that's a real burden, of course, of going through a private M&A transaction. And if the seller subsequently files for bankruptcy and prior to that a buyer has taken some of its asset, that sale could be attacked, or certain contracts related to that sale, like transaction services agreements, could be rejected. And that's a real risk, of course, to buyer, and buyers need to be aware of those burdens. Nevertheless, of course, transactions can occur in this context, and the environment remains unchanged at its core. An SPA or an APA looks and feels like a standard SPA or APA, but the advice that we provide to clients and the care that clients need to take is a little bit more heightened, of course, because of the distressed aspects. And for that, due diligence is key. Parties need to, the buyer needs to identify and understand the liabilities and issues so that they can be appropriately priced into the transaction or structured around. Many of these are the same issues that we focus on any transaction. Tax, labor are always the famous ones, particularly in Brazil. And now, because of the coronavirus issues, you have supply chain risk, whether products are able to get to market, and you have always regulatory and government compliance. And now we have coronavirus government compliance issues that need to be due diligenced as well. One thing is clear, distressed companies often default on some of their key obligations, and buyer needs to be aware what those are. Talk tax, labor, and of course, contractual indebtedness, etc. Management may not have time to devote to due diligence. And so as a result, seller needs to recognize the company may be moving very quickly, need to get this sale through, don't have time to have a beautiful data room, and buyer needs to really know what it's looking for, pinpoint those issues, and get them out of management so it's able to really structure the transaction effectively, protect itself either through contract, purchase price adjustments, etc. Compliance. Compliance has become a major issue in all M&A transactions in Brazil, particularly resulting from Lava Jato. And in this COVID-related environment, compliance is still important. And what we're seeing on our current M&A transactions, all of our buyers are absolutely still focused on compliance and absolutely should. One issue that I think is unique in the environment that we're in right now as a result of coronavirus is the travel restrictions. People, especially for a non-Brazilian buyer, can you get to Brazil? Can you meet management? Can you do site visits? Right now, that's probably difficult. And can you get what you need if you can't meet these people in order to make a successful purchase in the timetable that the company is providing you? That's really, really difficult. And so how we advise clients in this instance is really to really focus on purchase price. If you're the buyer, you're going to seek more deferred or contingent considerations. You're going to be looking for escrows. You're going to be looking for purchase price adjustments. You're going to be looking for earnouts. But seller, Danielle, as you said, seller wants to get rid of this asset. It's key to its survival. Your seller, you're looking for value certainty. You want to assume that buyer is priced in the discount for all that's going on. And so you want to know that when you sign that agreement, you're getting what you think you're getting as far as the purchase price. And those are I think, parties are more distant in this issue of purchase price in a distressed situation than normally, given the conflicting considerations. Representations and warranties. We advise our buyer clients, address your due diligence findings clearly through the representations and warranties. And now, as a result of coronavirus, we're making very clear that we're addressing COVID type issues in the reps. Government orders affecting business. Force majeure clauses are key. If force majeure has been called in a company's material contracts, we want to make sure that these items are disclosed in the representations and warranties. Probably one of the more key issues with respect to an SPA in today's environment is the interim covenants for deals that don't have simultaneous signings and closings. Buyer wants more control on how unforeseen operational decisions will be determined in the interim period. Company's a mess. Company's management needs to be able to run the business, but buyer wants to know that it's going to get what it thinks it's buying. And that's why it really needs to be involved more closely with respect to the interim covenants. But of course, parties, particularly with respect to Kaji, want to be aware of the gun jumping issues. Don't want to overstep that because you can have your transaction challenged. But really, we're looking at the idea, the definition of ordinary course in the interim covenants. What is ordinary course for a business in extraordinary times? You have to consider really specific exclusions from ordinary course in this context. And then last, but not least, of course, in the mechanics of an SPA in this context, Danielle, is the indemnity. There's always that conflict between the two different types of indemnities that we have in deals in Brazil. You have the Brazilian type, which is essentially that seller is going to indemnify for all pre-closing liabilities, versus the more New York style, which is discount from purchase price and seek indemnification for breaches of representations and warranties. And I think buyer really needs to question whether they're going to go with the Brazilian style, if there's even a question whether seller will be around or seller will have the ability to actually pay on those pre-closing liabilities. Because if not, you're going to find buyer being responsible, and obviously that needs to be taken into account if they're going to go forward in that way. And I just want to make one more final point. While we are in a distressed environment, Danielle, not all assets that are for sale or have been for sale are necessarily distressed. One can think, for example, of the Petrobras divestment program. A few years ago, of course, that started as a result of Lava Jato and Petrobras's needs to deleverage and sell some of their non-core assets. And those wound up being great transactions for buyers. Now, Petrobras has really established this divestment program as a result of really getting out of non-core businesses. And so you're not necessarily seeing these sales in a distressed environment, but nevertheless, we're going to see lots of transactions in the future as a result. The other one being, of course, the Brazilian government privatization program. The government is going to continue with this program. There are a tremendous number of assets that are for sale, and while economically, Brazilian government may be in a distressed situation, it may not approach the privatization program as distressed sales.
Thank you, John. That was excellent. I think you touched upon a myriad of subjects that are really important for sellers and buyers, and particular differences between New York style contract and Brazilian style that tends to have an your watch, my watch approach to indemnification. And the things you said about we talked a little about whether seller is going to be around or not. So that's definitely a concern, because at the end of the day, I mean, you might waste a lot of time discussing indemnification, and that might end up being as if you had a as is where is approach to purchase, because I mean, you might be wasting your time asking for indemnification if you have no certainty that a seller will be around to indemnify. Moving on, and thanks again, John. You talked a little bit about, John talked a little bit about opportunities to acquire assets that were before they companies file for bankruptcy or seek court protection. But he also touched on an issue that's quite important, which is what happens if I do buy an asset and then the company that sold that asset to me files for bankruptcy. John said correctly that there's likely going to be a large number of creditors attacking that transaction. That's to be expected. So when you get to that scenario that a bankruptcy or insolvency related proceeding is imminent, whether that's in the US or in Brazil, Fábio, what do you think I mean, there are a lot of advantages in buying, of not having to go through the whole ordeal of the RJ, but at the same time, there are advantages. And if you could, while you answer, we know there have been successful and unsuccessful attempts for asset sales in bankruptcy courts in Brazil, and also deep financings that would give extra life to companies in distress. How do you see that playing out? And there's been a question from the audience, if there's any expectation on whether the new restructuring bankruptcy insolvency laws in Brazil that we know should come out in the near future, if there's any expectation on when that will happen, if that's going to change. So what's the current scenario, and if there's expectation that will change once the new legislation come out?
Hey, thank you, Danielle. Yeah, sure. Great overview from Sam. Well, first of all, thanks for the chamber. It's a pleasure to have an event with the chamber and our friends Sam, John, and Pedro. We are very happy to talk about Brazil and potential, let's say, new waves and new developments on restructures in Brazil, especially my area. I'm the partner responsible for the reorganizations and restructurings, especially the judicial ones and insolvencies in Brazil. So getting back, just a word about the, let's say, the forecast before entering into the sales and the acquisitions in Brazil and the risks under acquisitions and advantages or disadvantages on restructuring proceedings. In Brazil, we have a say, in fact, more outside Brazil, that even the past is uncertain in Brazil. So we are used to the hard phases and ups and downs and the roller coaster of the economy. Which is interesting is that the recent numbers said about, first we have yesterday we had the lower interest rates for 20 years. And plus than that, we've been, the first numbers in terms of sales and consumer market in Brazil seems to be good. I mean, good in terms of pandemic. Certainly the worst is still coming, but as Sam said, it's hard to predict. I'm just saying that because just to give you a flavor on how it's hard to predict things in Brazil, even from legal structures. But anyway, what is important to emphasize is that, first of all, there are concerns, certainly in Brazil, by acquiring legal concerns, by acquiring from insolvency perspective, by acquiring especially a business or a business unity or an activity, an operational activity in Brazil and the assets involved on that, because first of all, we have the problem of succession on liabilities, as John pointed out. In fact, it starts as an exception, but it became a rule, right? For years and years in Brazil and Brazilian market, the contingencies are the rule of being, transferred to the acquirer or being contaminating the asset itself. So it's very important, as John said, to have a worry on that, and also to structure an M&A transaction, etc., with this concern. And for that, the first concern is, John also said, about the potential insolvency or even a bankruptcy proceeding right after from the seller right after the acquisition. So in Brazil, we have a provision in which a business unity, if a business unity is sold within the suspicious period, which is a retroactive period from the bankruptcy decree or an formal insolvency decree against a certain company in Brazil, the transaction itself may be ineffective, doesn't have effects before the bankruptcy state. So it is a concern. It's not that common that it happens, but it's a provision and it is a concern. So first, insolvency of the seller is something that it should worry when you were acquiring a business unity or a business in Brazil, a business structure with their assets, etc. And how we can deal with that? Well, first, John said, but from the legal perspective, you should be, let's say, checking and double checking the financial situation of the seller, and more than that, even the legal aspects from, for example, the protests. In Brazil, we have protests for defaults, etc., which is one of the milestones in which the suspicious period, the legal bankruptcy period, retroactively will reach transactions. So there are even formalities like checking protests, etc., which are more formal checkings that also could mitigate those risks, besides the financial and economic aspects of a transaction in Brazil. But because of that, either by the contingency, succession, and liabilities risks, and also potential insolvency and bankruptcy from the seller reaching the transaction, one of I believe the main alternative or main solution for that is the acquisition of a business unity under a formal judicial restructuring, which it was introduced in Brazil in 2005, and we didn't have nothing similar before, and we still do not have nothing similar after, which is the full protection for the acquirer, the purchaser of a business unity against any kind of liability and contingency that the seller may have, plus the asset will be transferred free and clear of encumbrances. In Brazil, onus, right? Onuses or onus, and which is more related to a kind of a collateral or other things, but we may extend it for other, let's say, understand that it could be extended for other liabilities regarding the asset itself, not the seller, but the asset, right? But anyway, which is the famous Article 60 under our bankruptcy code, right? And people heard about that and lived some experiences about that. In Brazil, we had the good news also, even regarding unpredictable situations in Brazil, is that we already have, let's say, a good experience on acquiring and transactions and acquiring or financing plus acquiring a business in Brazil under judicial reorganization. Since 2005, we've been having, let's say, waves of restructurings in Brazil and judicial reorganizations in Brazil, in which created a kind of although the law is quite, we may say, recent, especially regarding case law and court precedents, etc. 2005 is not a long period from 2005 on until today. But fact is that almost every year we had a big case in Brazil in which a kind of transaction was structured, right? Judicial reorganization, at least in 1 or 2 years, from this period, we've been having experiences on that and successful experiences. Certain with good results, certain with maybe neutral results, but not mostly bad results. Maybe one or other didn't have, let's say, the return, right? The recovery expectation, for example, when a transaction involves the conversion, the debt equity conversion, which was quite common in certain situations and certain periods in Brazil, right? And the creditors, especially international creditors, bondholders, etc., expected to receive an asset from the company, a business unity, and sell it and recover more than expecting the company to, let's say, get out of the reorganization proceeding. And we're going to mention something related to that. But, well, from time to time, we used to have it, like even from OGX case, for example, the oil and gas industry 10 years ago, I believe it's already 10 years ago, right, Daniel? And OGX was a kind of a first big case in Brazil, yeah, in which we had that equity conversion, for example, for the creditors to keep to acquire the business, let's say the whole business. It was not exactly an Article 60 proceeding, but it was approved under the plan and a part of the judicial reorganization, which at the end of the day turned the bondholders out to be the main shareholders of the group, the oil group, the exploration, the arm of the group, the oil and gas exploration activities. After that, we have the OAS case, which was another case in which we personally, me and Daniel, we've been involved from the acquirer perspective, right? Or the potential acquirer perspective, because at the end of the day, there was no purchase or sale or asset sale, but it was structured to be a deep financing with all this, let's say, the instruments that John mentioned, the breakup fees, deep financing, anticipating the price at the end of the day as an stalking horse as well, the third interest party that we were working for, accepted the situation in which financing the restructuring in order to participate in the Article 60 sale, let's say, under a judicial reorganization proceeding, which would grant protection. At that time, 2015, 2016, we were at the beginning, at the very, let's say, peak of the beginning, let's say, of the scandal, the Lava Jato scandal, and all the corruption problems, etc. Everything was uncertain, and OAS was one of the first companies reached by the Lava Jato investigations, right? When they started the proceeding, the judicial reorganization proceeding, the president was in jail. So, but they could, the company itself, the business was going on, and there was this solution, let's say, structure to involve in a judicial reorganization proceeding, in an approval of a reorganization plan, a judicial sale of the main asset that they had, which was in Vepar, the São Paulo airport, the subway in Rio, and other concession investments that they had, the group, OAS group had, and they wanted to sell this investment to a third party, and it was structured, and I believe at the first time that it was structured as a whole proceeding, involving financing, involving, sorry for that. Involving financing, involving the judicial sale and protection for the acquirer. At the end of the day, for other reasons, the interest acquirer, it took 6 months, 8 months, I believe, the whole negotiation proceeding, almost a full year. But at the end of the year, we had, for other reasons, the acquirer, especially the negotiation with the other shareholders of the asset itself. I mean, the shares that were being negotiated at the time, as John also pointed out, there are other aspects that also influence even the distressed, right, transaction. And because of negotiation with the other shareholders of those assets not involved in the proceeding, public funds, in fact, the interest party, the purchaser, was not interested in continuing and closing the deal, let's say. But the asset went to the bondholders, which placed a backup offer within the same proceeding that was created to sell to an investor, a third-party investor. And at the end of the day, after years, the asset under this structure was transferred to bondholders, in fact, expecting to have a recovery, right? So at the end, and it was quite recent, I believe this year. This year, I believe. But anyway, this is an example in which it is possible, it is good. We had experience in the past. We had also Abengoa, we had other cases as well in which a judicial reorganization was very useful in terms of creating environment to attract a third investor, a third-party investor and acquirer, especially international acquirers. We would have opportunities, as Sam said, very interesting areas, energy, infrastructure. We're still waiting for the whole infrastructure as well, remodeling, let's say, maybe, or restructuring. We have ports, airports, and other things, etc. also to come. But especially energy, right, which is an affected area in certain situations. But anyway, just to finish, it is a time-consuming proceeding. It's not a common or a regular M&A transaction or a private M&A transaction. It may be combined. It may be a combo, and we've been living that with some actual examples now, like Inouye case, very big and interesting business that are being sold, like the whole mobile business that Oi is selling. They are combining, let's say, private M&A, or a private negotiation of an M&A, as well with the judicial reorganization structure to give protection, the best protection that we have according to the Brazilian legislation for a potential acquirer, which is quite interesting, right? It's a good combination, but does not, let's say, exempt the judicial proceeding. It's a little bit time consuming. We do not have a judicial sale within a judicial reorganization in Brazil before 6 months for the effects of the Article 60, right? And the full protection. So it's kind of and there are other elements like approving a plan with the creditors, etc. So it may influence also the dynamics of a M&A or a distressed transaction in Brazil, but it will give the best protection that we have.
Thanks, Fábio. And just to make clear to everyone, when he said the president was in jail, was not the country president, was the company.
The president of OAS.
The company, even though, I mean,
no, we have
presidents in jail too.
And some governors and others.
Well, if it's in Rio, I mean, we have the best 5 in jail. So the best 5 governors of Rio have ended up in jail. So I think that's a record.
Which is good, which is a cleaning up, right? We are cleaning up everything. So
hopefully we are.
Yeah, we do.
I think we'll circle back later on discussions between different jurisdictions and how that plays out and how possibly the changes that are being proposed to the Brazilian bankruptcy law will impact the ability of buyers to acquire assets that are being sold in an insolvency scenario or to provide deep financing, because we know that's been difficult in Brazil so far, especially I think especially deep financing, not asset sales particularly. But before we get to that, I want to ask Pedro Jimenez from Hastings, and thanks Pedro for joining us too. I want to get you involved in the discussions here because you bring a lot of experiences in distress scenarios, restrictions all over Latin America. So I want to hear from you a little bit of some of the experiences you've had and you've seen of successful, unsuccessful turnarounds in structuring deep financings in Latin America, what worked out, what didn't, and so what's your experience being like? And then later on, I mean, if, we can move on to, we've seen companies filing for Chapter 11 and not filing for local insolvency proceedings in Brazil, the RJ or judicial reorganization, or sometimes taking another route, which is the Chapter 15 local court proceeding approach. So what's your experience been like? And thanks again for being with us today.
Danielle, thank you. And good morning to everyone. I want to be mindful of our time. I know that we've gone on for a little bit. So let me, I think, set the stage for a conversation around Chapter 11 and how that has been used as an option to more of an in-country restructuring, whether it be in Brazil or some other Latin American country. Chapter 11 is no stranger to foreign companies. There are a number of foreign companies that have utilized Chapter 11 to successfully reorganize their business. And we can discuss this a little bit more when we get into Chapter 11 versus Chapter 15, but the standard for a foreign company to be able to use Chapter 11 is very easy to satisfy. The U.S. Bankruptcy Code, which is the U.S. insolvency law that governs Chapter 11, only requires that the foreign company have some assets in the United States. So companies have been able to tap in and use Chapter 11 with as little as having a simple bank account in the U.S. And courts here have interpreted the test of some assets very broadly and have said even a retainer with your law firm in the U.S. or your contract rights under your U.S. law-governed bank debt or U.S. law-governed bond debt is sufficient to create eligibility for the foreign company to utilize Chapter 11. I will say this, and I've been doing this for quite some time and have had success in utilizing Chapter 11 to assist the Latin American company in its overall restructuring. But in the past, it's been very surgical in how the company has utilized Chapter 11. And what I mean by surgical is that the company has done most, if not all, of its negotiations with its creditors before filing for Chapter 11. And Chapter 11 really has been the means to consummate the arrangement or the deal that the company has struck with its creditors. So whether that deal is consummated through what we would call here a pre-pack Chapter 11, where the company has already solicited the votes of all of its creditors prior to filing for Chapter 11, or whether the company utilized what we call a pre-negotiated plan, where the company would have negotiated with some of its creditors, but not all, and then files for Chapter 11 for purposes of soliciting the rest of the creditors that are going to be impacted under the plan. There, the idea is that Chapter 11, you can tap in and utilize to consummate the restructuring, but you're going to be in Chapter 11 for a very limited period of time, in that you're a foreign company. Obviously, you're operating outside the US. There are some limitations or some potential challenges in how you can operate the foreign business in Chapter 11. So you're going to utilize Chapter 11 for a very limited period of time for a very limited purpose, in that you're trying to restructure financial debts. So Danielle, I know we want to cover a couple of other topics. Those have been the instances where we've been able to use Chapter 11 very successfully as part of an overall restructuring by a foreign company.
We do have a little bit of time, Pedro, before we get to questions. We wanted to hear was about best experience, and I think you brought that a little bit. If both you and Sam talk about, if you could give examples to extend, I mean, most of the stuff is public, but to the extent they're not protected by confidentiality, of course, some of the transactions you see turnarounds and transactions that were successful in a distress scenario. I know there have been plenty. And then there were a couple of, and then I'll go to a couple of questions we got from the audience.
Sure, Sam, you want to go first?
Sure. Thank you, Pedro. Thank you, Danielle. Look, let me start off by talking quickly about OGX. You know, Fábio mentioned this. I think I don't want to go through the history of OGX, but fundamentally, a lot of restructurings are about, you know, the resizing, obviously, the size of the debt versus the ability of the company to service that debt. That's fundamentally what needs to happen, either, you know, by the company fulfilling that, or through a merger, or whatever means are achieved. And fundamentally, OGX became sort of the poster child of some restructurings in Brazil, because it was the first one. It was a very large one. You had a dip, and later on, you had you know, a change of control into that. And ultimately, what the company did was resize its size, resize its operations. And I think the latest I read about it, which is now called Domo, they've invested up to, I think, $80 million in their field. Obviously, the COVID and the lower oil prices are not helping, but fundamentally, that's what happened. You have to resize operations, and I think that's successful in that sense. And I haven't seen that many companies in Brazil sort of achieve the economic, you know, optimal, you know, objective that should be achieved. I mean, there's examples, and I can miss a few, but Eneva is a good one too. Eneva's share price is trading at roughly 50 reais today. Back in the days, I think the restructuring took place in 15. There was a need to resize, obviously, the debt. There was equitization, with the understanding that there was, you know, difficulties to be able to meet, you know, the service debt, which in today's terms, I think in terms of COVID terms, is we have to realize that the assets are worth less than the debt. So there's a realization for equitization, debt forgiveness, which doesn't really happen in Brazil all that much. Or if it happens, I think it happens in NPV terms. In other words, we tend to keep the debt at full face, but payable over 20 years, which really doesn't help. Just to finish off on the Eneva, Eneva was, I think, had all the ingredients of making it a successful restructuring. The participants or the stakeholders had a vested interest in making it work. I think there was a contribution of PGN, which was the holder of the natural gas asset. Obviously, there was a foreign holder, so in a way, the absolute rule of priority was clearly respected. There was an RJ, everything was in order, competent management. The ingredients were there altogether. And I think that was, in a way, swift. The insolvency process was used to, to implement that solution, and it went very well. I'll stop there. Back to you, Pedro.
Thanks, Sam. So from my standpoint, I mean, we have utilized Chapter 11. You have a number of Latin American companies that have issued bonds governed by US law, and as part of their overall restructuring, they need to restructure those bonds. We have been able to utilize Chapter 11, where we can solicit votes on a Chapter 11 plan. We can do all of that prior to filing for Chapter 11. And the company simply files for Chapter 11, and it has a very limited stay in Chapter 11 just to confirm the results of that solicitation and impose the plan on all of the bondholders, including those parties that did not provide a vote on the plan. And that's been done on countless occasions. We just finished one recently for a Mexican company called Maxcom Telecom, where that was exactly the purpose of the Chapter 11. We were able to get the company in and out of Chapter 11 in less than 30 days. And we're able to utilize Chapter 11 to allow the company to successfully restructure the bonds, including on all of the parties that did not vote on the plan. So there, kind of going back to what I was describing a few minutes ago, utilizing Chapter 11 in a way where you have a very limited focus, but very powerful focus as far as how the company can utilize the US laws to achieve restructuring of its obligations.
I think there are a couple of questions here from the audience. I'll start with the first one we got a while back, which is some of the industry are regulated industries and have limitations. We saw a huge failure in the, not in the, with Avianca and with and there's, I mean, and Viracopos is still somewhat in a gray area on what's going to happen. And when we talk about Avianca, we're not talking about Avianca Colombia, but rather Avianca Brazil, which recently began the process of liquidating its assets. I think the question, it's a bit to Fábio and Sam, but I want John to chime in too, because it touches upon the, this is related to regulated industries and the difficulties buyers have experienced, and that affects sellers too, of course, because when buyers, sometimes buyers want to get to an asset that is in distress, such as Viracopos, but there are limitations on whether they can restructure or renegotiate actually their concession agreements. And that's been a major hurdle. So I think a question to the three of you, actually, Sam, Fábio, and John. Fábio, on mostly whether you can have a court ruling from bankruptcy courts forcing the hand of the granting authority to change a concession agreement. Also, whether the bankruptcy courts would actually have the ability to force the hand of a granting authority to change a concession ability to make a restructuring work. John, on what seller and buyer should look for when we're talking about a regulated industry, and Sam, of course, the financial outlook and how that all plays out.
Okay, good question. This debate is more recent, right? We live an experience in Viracopos, for example, in Brazil, I mean. But I would say that not forcing changes on concession agreement because it's full regulated under the law. That's the problem with concessions and concessions agreements. But certain aspects like the debt or accumulated, let's say, debt or even investments related to the concession agreement could be dealt under a restructuring and a judicial reorganization proceeding. In Viracopos, we had a decision, for example, that obstructed by the bankruptcy court to obstruct the termination of the concession agreement, which was the total, let's say, death of the airport, right? Or the concessionary, the entity, the legal entity. So once they won't have the concession, the airport anymore, they had just that airport, they will not survive, and there will be no restructuring and reorganization, not even judicial reorganization opportunity, even approving a plan, even granting by the court. It was a debate, even regarding which would be the jurisdiction, the competent jurisdiction, because the airports were regulated by a federal entity, a federal authority, right? And the restructurings and bankruptcies in Brazil, judicial reorganizations, are held by state courts, which is a kind of a debate. But anyway, I would say that certain aspects, and we usually have more problems with the debt accumulated. I mean, the debt that the concessionary and the legal entity under the concession owes because of, fines or investments they did not make, etc., during the life of the concession agreement, other than, the continuity of the agreement. The problems are more related with the debt. And now we have, the good news is also that we have at least a law, a recent law addressing the settlement that the companies under those kind of authorities supervision, that by defaults, by fines applied to the concessionary, etc., settled, which was pretty much uncertain before the law. So now we have, let's say, certain important and relevant aspects to deal in judicial reorganization and restructuring.
I'll go next, Daniel. So this really, your question really goes to the point I was making about the importance of due diligence in a distressed M&A environment. Even though buyer may be getting the asset at a discount, buyer wants to be sure that it's actually getting the asset. And if Brazil has many industries that are highly regulated and have regulations against the purchases by non-Brazilians. And what buyer wants to do is ensure that it does its due diligence, hire renowned Brazilian law firms like Cescon, Barrieu, and make sure that they really lift up all of the rocks and uncover all of the issues relating to regulations of the industry, and then be sure, if you're not going to get those protections, that you account for such, whether directly into the purchase price or in some sort of purchase price adjustment mechanism.
Thanks. Sam?
Thank you. Like, it's a good question to discuss concessions and airports at this stage. It is within the supply chain of the airline industry. As you could imagine, if the airlines are not paying or not using because there's no activity in itself, well, the concession debt just keeps growing, and the authorities are going to have to be very flexible with how they treat, those liabilities. You're going to have, obviously, in Brazil, nobody has, a Chapter 11, you're going to have the pre-petition, post-petition. I think Pedro can speak about that, how that's treated, and I think that's an interesting case of a foreign vendor exception. I think that's a real plus for the Chapter 11, but at a high level, what you're going to have is debt that's going to have to be rescheduled. And the authorities in Brazil, I think they are rigid, but I think what we're seeing in the environment is certain flexibility, obviously, to allow those operations to continue. In other words, the concession can be rescheduled going forward. You can have grace periods, or interest payment holidays, or principal payment holidays during a period of time until this happens. But the reality is, if there's no activity, there's no cash flow, the concession cannot be paid. So I gotta believe, and I think we're seeing some flexibility from the authorities, and it will be dependent as to whether they have the ability itself to rule on that themselves, or whether other authorities in the government, the CGU, for example, comes in and has their own view on these things, which is, I think that would be the typical thing. But just I would highlight two things. One, for Pedro, really, the ability for for companies that are obviously with operations in Latin America, they have the ability to, make some payments on a pre-petition basis, which gives you a lot of flexibility. As for the Brazilian companies who are negotiating on a bilateral basis out of court right now with the concessions, well, the authorities are going to have a lot of flexibility going forward. Thank you.
Sam, thanks. So I think a lot of folks on the presentation have seen both Avianca and LATAM who have utilized Chapter 11 to attempt to reorganize their businesses while they're going through this pandemic. They have obtained authority to have the ability to utilize money and cash that they have on hand to address various obligations, including any pre-petition obligations that they have in respect of their various concession obligations. And there, at least for the time being, that has been somewhat pushed off, in that the airlines are not having any passenger traffic, or very little in the way of passenger traffic. So they haven't had to address these issues square on just yet. I agree with Sam. I think that there is going to be, and certainly a need to be flexible on the part of the government authorities in negotiating with the airlines on how these concessions go forward, and that the airport authorities need the airlines as much as the airlines obviously need the airport authorities. So there needs to be some realization once everybody understands what the passenger business looks like going forward, on what the concession obligations should look like as a result of that. So, I think there'll need to be a very consensual discussion about what that concession looks like going forward. In terms of whether the U.S. courts can impose a different pricing structure on the airport authorities, the answer is no. I mean, they have their agreements. The airlines could decide to reject those agreements as part of that Chapter 11, which conceivably could be some leverage that the airlines attempt to use. But at the end of the day, the rejection doesn't solve the bigger issue for them. They need the concession in order to be able to fly into those airports. So there's going to have to be a mutual conversation to be had between the airport authority and the airlines about what the concession should look like in light of what a post-COVID passenger load is going to look like.
Thanks, Pedro. John, I think you've got a question there too.
Yes, thank you, Danielle. This comes from Martin Schubert, a longtime emerging market debt legend. Can one of you talk about government debt situation and the risk involved for those holding local currency debt, and also discuss the situation of agency debt? And finally, if there was a situation where you had a sovereign default, would this be restructured separately from the agency debt from the government debt, or as part of the government debt? And then what about state debt? But there's not that much in the market. But anyway, those are the three layers of this question. Thank you.
Look, I can take a quick stab at it from an economic perspective. I think the risk is obviously very low that this were to happen. Brazil has, I think in excess of $200 billion of foreign reserves, so there is an ability to survive that. However, I do share some of the concern with respect to, let's call it the agency debt. Certainly, for the company to be able to pay, let's say, some of the precatorios right now, which is really the payables itself from a tax perspective in 2 or 3 years, I think that is in some cases, and I think whether it's federal or at the state level, it may be put into question in certain cases. I don't want to generalize, but certainly the run up in the fiscal deficit today will make the government's finances obviously a lot more precarious. And I think that's where your question comes from, and it's very legitimate. And I think certainly, one area where I would think, the price will need to see that in the market is on the precatorios itself, because it's the ability of the government to make a discretionary decision at that point in time to pay specific claims to specific interest groups. For example, in the sugar and ethanol, I mean, you have a lot of claims of that sort which have been adjudicated now to, and potentially scheduled to be paid in a few years. But it's very different than sovereign debt. I think sovereign debt has a much bigger connotation, but I think there's a subclass of debt in Brazil which, may or may not be paid as quick as one would like that. But I'll leave it to counsel maybe to chime in.
John, I saw that you hit the mic before. Do you want to swing at it?
Yeah, I'm sorry, go ahead. Sorry. I was just going to add two things. I'm sorry. First,
Okay.
if you, on the external debt, you're absolutely right on the situation right now. Brazil, as of the end of June, Brazil has almost $350 billion in foreign exchange reserves, and the gross total, including private and public sector debt, is $308 billion. So their reserves are much bigger. The only other thing is that in the States, the only real outstanding debt is are the syndicated loans, right? Which aren't very big, but still the States are not in great shape. I apologize for stepping in here. Sorry about that.
Thank you, John.
So I think we can, we have a couple more questions here. One of the questions is how do we see a more prolonged recovery impacting the role of capital markets in survival of an acquisition of companies? One of the things that's been asked is there's been a spike in SPAC IPOs in the U.S. And there's one that actually that is targeting the acquisition of a Brazilian company. If any of you guys expect similar structures, innovative structures such as those SPACs IPOs to acquire distressed assets, especially in Brazil or even throughout Latin America, do you foresee an increase in those different types of transactions, or some sort of hybrid, convertible, stuff like that? Is that something you guys expect?
I can take a stab at that one. I think the long answer is yes. My partner, David Fleckner in Brazil, is up to his eyeballs right now in IPOs, and our friends in the Brazilian law firms and international law firms are all just as busy doing IPOs. We're in an IPO boom in Brazil. And one of the reasons for that is because of this massive movement of fixed income dedicated money in Brazil moving into equities to chase higher yields. And with this distressed environment that we're moving in, plus all of this excess cash, I think it's just a matter of time before we start seeing lots of different types of securities being offered, companies needing cash and looking for creative ways to get that. And I agree with all of those hybrids mentioned in your question, Danielle. I think we're going to see a lot of new development in the capital markets, and the capital markets really serving as part of the solution to the distressed situations that we have in Brazil.
And I think you touched upon that's a great subject, because we've actually seen people discussing SPACs to the sole purpose of buying assets in distress. And we've seen convertibles being used. We have Leak, which is the former contact center division of Oi that was spun off ages ago, and they restructured. We did that a couple of years ago, and they used convertible debentures to restructure. So that's definitely going to be on the plate. But of course, if that's under an insolvency proceeding, court reorganization, Chapter 11, that's definitely going to need court approval, or perhaps, depending on the jurisdiction, creditor approval too. And one of the things, I mean, that we discussed this before, is that there are discussions on what's best. I mean, should you choose? What are the advantages of going the LATAM route, to use LATAM as an example, and filing for core protection in the U.S., we know that there's the discussion on the lease agreements in particular, but also LATAM hasn't, at least so far, seek protection from courts in Brazil. So Pedro and Fábio, how do you guys see that interaction between seeking protection in one or both jurisdictions simultaneously? I know we've discussed this before. And Fábio, I think one of the things that might be, I don't want to, of course, answer for you guys. You have a lot more experience in that. But one of the things that might drive people to file in the U.S. is because, as we've seen in the past in Brazil, it's difficult to get a debt financing approved. It's not an easy task. Not that it's easy in the U.S. too, but at least there's a clearer path. So if we could start with Pedro and then Fábio, when we get to your answer, if you could touch upon if there's an expectation on any amendment to our insolvency laws here in Brazil.
Sure. Thanks, Daniel. If you think of what the primary catalysts were or are for LATAM or Avianca to have filed for Chapter 11, you obviously have a serious liquidity issue given the stoppage of flights, especially the passenger flights. And you had, what does that stoppage do as far as what their aircraft fleet looks like going forward? And I think both of those things really lent themselves well to Chapter 11 with the liquidity issues that both airlines were facing. They were certainly going to require debtor in possession financing. They have been able to file for Chapter 11. I think for LATAM, it remains to be seen what the judge does with the current financing proposal that LATAM has proposed. For those of you that have been following LATAM, the hearings have been taking place last week and this week. The judge is expected to rule relatively soon on the company's request for debtor in possession financing. And there the issues really haven't been, should the company be eligible to get DIP financing? Everybody agrees that the company needs DIP financing. The question is, who should be the people that provide the DIP financing and under what terms? Since LATAM has proposed at least part of its financing package to be provided by existing shareholders of the company. And a number of parties, including distressed players, have wanted to participate in that financing and disagree with the company's proposition or argument that the existing shareholders are a right source for that financing. So from the standpoint of, is DIP financing available to the airline? Can they get enough DIP financing to be able to continue operating once they resume operations? The answer is that has been successful for them. They're going to be able to tap in to the amount of financing that they need. We still have to work through this issue of exactly who the financiers are going to be. With regards to the aircraft fleet rationalization, they have been able to use Chapter 11 very successfully, either in reaching deals with some of the lessors to allow the aircraft to be stored and kept while they're trying to figure out exactly what the passenger business looks like moving forward. Or in other cases, they've been able to reject leases that they found to be not part of what their aircraft fleet looks like going forward. So from that standpoint, again, they've been able to check that box. I think where there are going to be challenges up ahead are going to be, what do the airlines do with more of their local law issues? For instance, how can they rationalize their workforce once they figure out what the business looks like going forward under Chapter 11, where I think the U.S. court is going to have a real tough time taking jurisdiction over those kinds of issues. So I think that both airlines are going to have conversations with their respective labor unions and with their employees. Those will have to be done on a local law basis. But for right now, if you think of the two big catalysts that both airlines have, the Chapter 11 option has been good in terms of trying to help solve both of those issues.
Thanks, Fábio. We've actually tried to do DIP financing, and Pedro pointed out correctly. Everyone knows there's a huge. It's a hot contest to see who gets to lend the money to the company, and we saw that, and we know creditors can pose problems in Brazil, which sometimes differ from what we have in the U.S. Do you foresee that being changed with proposed changes? They're currently being discussed in Congress, in the Brazilian Congress, with respect to the local bankruptcy law.
Okay, thank you. Well, first of all, I wish we could have this kind of argument. Who wants to lend the money? Who will be lending the money to the company under reorganization? It's really, our argument here is the opposite. Who does not want to give money to the company under a restructuring proceeding? So you have a good problem in US, right? A good argument. Well, in Brazil, we have a bill being discussed under the Congress for maybe 2-3 years now. The last one, well, we had a dozen of proposals of amendment to the law, to the bankruptcy law, past 5 years, even longer than that. But they were consolidated last year, and we had the former ministry of finance here wanting to approve that last year, but it was not, let's say, developed. It was developed up to a limit, but after that we came with in Michel's Temer's government here, the last president, the previous president. But anyway, we have a suggestion there under the project that is consolidated in the Congress, which is introducing the Chapter 15, which is good. Some cases like LATAM, which we do not have now in Brazil, the Uncitral model law, or an equivalent to the Chapter 15 to give effect to a filing in New York, for example. But this project, this new bill being discussed under the Congress, introduces the full, I believe, the full text of the Uncitral model law and a kind of a Brazilian Chapter 15, but it's almost a copy of what Uncitral suggested to the countries, which is much inspiring for the Chapter 15 as well, as far as I know, right, John? And plus than that, and we have a whole chapter for a more sophisticated, I would say, deep financing rules or proceeding in a judicial reorganization, which is good as well. But the main problem in Brazil on deep financings is that we have a priority. Well, the deep lender has a priority, even according to the current law, right? Which is not changing that much on this new bill or the proposal new has a priority, but not a super priority, or not certain post-petition creditors may have the same priority, certain of them, and certain expenses from the proceeding, etc. It is what actually the current law provides. So it is good for pre-petition, but it's not that good, that super priority for post-petition. That's why we ask for guarantees, collateral, fiduciary transfer of, irrelevant assets, business, etc. That's why we need that. And that's why we need the court to approve that, or even the plan to approve that today. The new bill would provide for a whole proceeding, let's say hearing the creditors, as much more similar for the deep financing, much more similar to the US proceeding. But we want to be more clear. We would like to be more clear on the bill for the super priority, to give the full assurance of lender, a deep lender, that his recovery is guaranteed, is assured above all of others. It's not that clear under this project, and we would like to be more, emphasized on that. But anyway, we've been expecting the law to be passed, but then came pandemic, and pandemic, it was split in an urgent other proposal bill related to this bill. So we approved these urgent matters, insolvency preventive matters, on first in the House of Representatives. It's coming to the Senate, but it's just the urgent matters. It's not the full amendment to the Brazilian law. So let's see how. There's been, last week we had other views and other talks, and it seems that the full, let's say, amendment to the Brazilian bankruptcy law is coming. So we wish it would come in as sooner as possible, right? But it will take months at least, you know,
All right.
not before that.
Thank you, Fábio. I think it's, we've actually run past our time here. I want to thank everyone in the audience, but particularly our guest speakers here, Sam Aguirre, Pedro Jimenez, John Kellner, Fábio Rosas, and thanks to the Brazilian American Chamber of Commerce to giving us the space, for giving us the space to speak on a subject we think it's important and something we probably wouldn't be talking about if it weren't for the pandemic. But the pandemic's here, and we got to deal with that. And for every time there's something bad that happens, it's also a time where you can look for opportunities, and that's what everyone should be looking for. So thank you, everyone, and I'll give it back to you, John.
Thank you, Danielle, and all the panelists for a really excellent discussion. And once again, special thanks to Cescon Barrieu for sponsorship and organization of this great panel. Before I close, I wanted to remind attendees that on Tuesday, the 11th of August, we will host a workshop with Gil Hansen on discovering your own brand value at 10 a.m. Eastern Daylight Time and 11 a.m. Brasilia time. We hope to see you then. In the meantime, stay healthy and safe. Thank you all again.